Well, hello there. Yes, it's been a minute. But you know me, I don't come around unless there's really something to talk about. And I've been busy with other things, very busy, which I'm hoping to wrap up here very soon. And we will talk about that another day. But I'm here to bring you some interesting updates with AMC that I feel are relevant to talk about. That is the fact that we are over $5. So, no, we're not. We had a high of 5.11 today. That was the good news. But we did get above that $5 mark a few days ago, and we have a lot of bullish signals popping up on the daily, like right here. We have a lot of things happening in the technical analysis side of things. But what I wanted to turn your attention to is, option statistics. If you didn't know, options and total notional value exceeds the trading volume of, the underlying securities in total, which is fascinating because if you think about it, that means that in reality, what could be moving the stocks back and forth is the hedging positions and the options, which is what moves the underlying pricing because their hedges are being adjusted where they're buying shares or selling shares in the market, all from options activity, which is very interesting to think about. But anyways, what we're looking at here is the option statistics for AMC today. And, we're starting to see calls outweigh the puts, which was not the case as of recently. Recently, we've seen a lot of puts, and that's, if you look at this and you look at it at face value, you're going to get misled because you have to remember there's two sides to a market. So when you look at it this way, this could be seen as bullish or bearish. That's why we're going to pair this with other things to back up the fact that it is in fact bullish. Because, for example, if this was the other way around and we saw a bunch of puts, we would immediately think that was bearish unless, we thought about the other side of the market. Because if you think about it, if you have a lot of puts open and the price is kind of consolidating, then most likely what these puts are being opened for is to sell them. And another thing could be if the puts are not being sold, they're actually, covered cash secured puts. That means they can exercise them if they go in the money and acquire the stock at a lower price, meaning that even though there are puts being, brought up on the screen or puts being traded, that could still mean that the stock is being acquired and being bought. However, with calls, it's a little different because with calls, if you exercise your call in the money, then you're doing the same thing. You're accumulating the stock, but at a higher price, depending on where your strike is. But that's the way to look at it. Is there's two sides to the coin. So the way we know this is bullish because it's flipped to calls is because if you look at this, and remember this just changed because it's been heavier on the put side until recently, but now we're on the call side heavy. And if you pair that with the implied volatility levels and the historical volatility levels, it indicates some bullish movement because what we saw before, we saw the puts leading the pack because more than likely they were accumulating the stock. And we know that because we looked at the institutional ownership and we saw that, in fact, a lot of institutions were buying into the stock. And then as of lately, based on the latest data, they're now selling the stock with 25 positions open based on this data. But the positions that are open right now are the huge institutions that just jumped in last month. So it's kind of hard to process, but all of these companies here that are dumping out, again, on face value, it looks bad because 336 sold out. But in reality, that's a good thing because now the people with the big positions are ready with their run. They got all this traded back and forth via share lending because we know that by looking at Fintel. And, Fintel shows the different institutions that are buying in, and you can look at their call and put positions. A lot of these are share lending vehicles, such as the Maryland State Pension Fund. They sold out 100% of their holdings in July of this year, the 30th. And we saw all the big boys buy in with these huge positions. So what does that tell you? That they're anticipating a move upwards. And all of that kind of fits together in this picture because, again, it's red and green. Look at this, red and green. It's not that simple because red can be green and green can be red, even if red is red and green is green. It's like a Dr. Seuss book. You got to look at it both ways. So whenever you're looking at options, look at the IV. And the way we know this is bullish because the IV is low, historically, it's at 0.38% according to this data here. And that's lower than it's been over the last year. The current historical volatility is 36.42%, which is in the 0 percentile rank. That means that 0.38% of the time, historical volatility was lower in the last year than the current level, which could also, precede a move in the upwards direction. So all of these things point together towards an upwards move, and it's kind of a layered approach to looking at it instead of just looking at a chart or looking at one set of data like short interest. It all kind of fits together, and that's what I wanted to bring up today is just the fact that it's coming. I'm certain it's coming. It's between now and the end of the quarter, which if you look at the quarter chart here, I wanted to bring your attention to the MACD real quick. Indicators. I haven't used this in a minute. That's right here. MACD. Yeah. Okay. So let me take this line off real quick. And that's, I think I think this is going to be your dildo candle right here. This is going to be it. The big one. It mirrors here. I mean, I don't know. I like to look at symmetrical shit in the markets, and the MACD is perfectly symmetrical here, and it could very well make that arc upwards, and we could see a big pump upwards in the next couple of quarters. Who knows? But the good news is there's more indicators leading to it becoming a bullish move over a bearish move, and the only thing that could screw this up is a horrible earnings report that's coming up soon. But nonetheless, I think we may still see a run upwards prior to earnings because of the IV situation. So that's what I have for you. Anyways, y'all have a good one. I'll get stuff out there as it becomes relevant.